Yeah, we can just, there we go. We can just start now. We're good.
Got it.
So, I mean, a lot of us don't really have a quasi strategy of scaling in because we were so used to being all in on every contract, on every trade. I'm all in
Yeah,
with
exactly.
one or two ES contracts. So now, so the issue that I have is I have got levels, that I trade level to level, but I want to scale into these big moves. So I'll start with 25% of my, if I'm a 10 contract trader, maybe I'll start off with a couple of contracts. And as the price moves up, I want to get to a bigger position. Well, the problem is my entry, starts moving up. So I get to a point to where I'm in a big position, a bigger position, but my entry has gotten so close now because every time I scale in, right, it moves my entry up. Does that make sense?
Explain to me a situation. I'm not exactly sure I know what you mean.
So let's say that the price, if you're looking at my screen, the price goes up, right? We're in a trade and we hit a level. Let's say this blue line is my level I want to hit. And I want to scale in at that point. Well, if I scale in, if I'm in at 2 contracts, I scale in at another 2, my original entry is going to be up here now, right? Because it moves it up. So now if I get any type of a retracement, I'm like in a bigger position and now I'm down in the trade. So that's what I'm trying to avoid. That's why I've had problems with scaling in.
Oh, I
For me
see what you
personally.
mean. Yeah.
Yeah.
So
So
a
now
lot
I'm
of
in a
what you're
big
doing
position
is,
and it's going against me.
so, okay. So one of the things that I would look at is when I look at something like that, and if that's the situation, then you almost have to manage it as 2 positions.
Oh, okay.
Because if anytime I'm adding to a winner, the worst thing you can do is add to that winner aggressively in a situation where if it comes back a little bit, like you said, is now against you, right? And so what I do is anytime that, first of all, you have to look at the range of execution. How far away are you going to allow yourself to add to it, right? It depends on how close you get to your target. The only time that, I think obviously everybody can relate to this. If I have a target of, I'm only looking at your screen right now, so it's actually hard for me to read it, but where are we trading right now? Is it exactly 4,000?
4,003.25 on the MES.
Okay. My point is, let's just say that, for example, you were to buy them here. Let's just say you buy them at 4,000, your target's 4,010, and what do you guys have a normal stop that you would have, like a distance wise?
Yeah, it all depends on where I'm at and where the last, turnaround was or what I'm trying to clear. So it could be anywhere from 3 to like 8 points, depending on how big the market is, what I need to clear. So I don't use the same stop every time. It kind of depends on where I'm at in the market. So like in this scenario, if I get a turnaround here and I want to go long, let's say, right, I'm going to probably want to clear that wick. If I get in the trade somewhere around 4,004, maybe at this fib level, I want to try and get in here. I want to clear that wick or the 89 moving average. That would be where I want to clear my stop.
Got it. Yeah. So then you have to look at the distance for being right versus being wrong on an ad, right? I think for intraday traders that are trading relatively tighter stops, which is in the scheme of things, 3 to 8 point stop in the S&P, let's just say that's about what your average is. That's a relatively tight stop. So therefore, you really have to be aggressive on adding only almost immediately after initial entry.
I got it.
So I would never add to something that's already running my way. And the only way I would ever really do that on a day trade is if I'm like really trying to press them to, let's just say I'm trying to press them to the target. Like I feel like the move is now underway, where it's like, okay, now this big picture move is stepping into play here. And I have the possibility of a really big type trend day. What would indicate that? And then I would do them as separate positions. So what I would do is I would use that money that I've made on the initial position as the ability to risk some on an ad. So the ad would be its own position, not a overall position.
Got it.
And so that's when you're getting bigger to a trade that's underway, you have to look at it as the ad has a really tight stop. You know what I mean?
Gotcha. Yeah. So maybe if I'm using a 5-point stop, now maybe I have to go down to a 2-point stop or something
On the ad.
on the
Yes.
ad, on the ad. Yeah. Yeah.
Yeah,
Yeah.
yeah.
Okay.
You know, and because that to me is allows you to participate in like a trend type move that you're adding to. Because I always look at it like this: if the market is giving me additional money, right? From a position that I've made, or I'm in a position that I'm making money on. How do I make additional money on the money that I've made? And what I'll do is I'll try to basically scalp with the trend. You know,
So you'll
so
be
I'll try
pulling
to
out
add.
contracts
Yeah. Yeah.
as it
So
goes up.
yeah. And so that's why like the micros are good for that, because it basically, you know, for the NASDAQ especially, I mean, the MES too. The problem with the MES, I think the difference is that my adding in the MES is always going to be in the ES is going to be in a tighter range because of the fact that the price matters more, right? So your price doesn't matter as much in the NASDAQ, but the price matters in the ES, right? So if you think that you're going to hold 4,000, it's going to go to 4,010 and 4,000 holds. Well, if I see that 4,000 holds and I bought a bunch at 01 and 02 and 03, there's almost no reason for me to add to that position as it starts to go up, because I've already should have on the bulk of my position, right? With the NASDAQ, it's a little different because you just have, it swings too much on both sides, right? So that's why I really only use the MNQ, because of the fact that the NASDAQ is going to blow through almost all my levels. Very seldom, very rarely does the NASDAQ hold a level that I have, right? And if it does hold it, it's like, okay, great. I couldn't have bought that many down there anyway, or sold that, because the reality is its price doesn't really matter there until way after the fact in the NASDAQ. I mean, I've bought stuff in the NASDAQ that I've seen bounce 20 handles and come right back through in the next bar and blow through it. We've all seen it, right?
Yeah. Yeah.
So I'm much more like, okay, I give it a lot more room. And so like with the MES, I just give everything, or the ES, I give it a lot less room, because I'm trying to be aggressive adding in a tighter range because of the price response. Right. And so I think for you guys that are trading MES, I think you got to look at it as, let's just say you're going to get to 10, right? Because if, 10 or whatever it is in the MES, you've got to be in 6 of those probably relatively quickly after the response of your area. So if you liked an area and it hits and it holds, short or long, you've got to be in 60% of them within a couple of points, because you're losing your pricing power with ES as it starts to go your way. Versus the NASDAQ, it doesn't really matter, right? Because the NASDAQ moves
it moves so fast.
It moves so fast. It's like you wouldn't have bought them there anyway.
Yeah.
I mean, nobody can leverage in too many contracts in the NASDAQ at one price. It's just too sensitive.
So I guess in a nutshell, it means I need to get a little bit bigger in my position then, and not look for these, 30-point, 20-point runs and trying to hit every level, but just look for a little smaller range and get in a few more contracts and not try and just keep, adding on as the price goes up or down. It doesn't really matter if it's long or short.
Correct. I mean, that to me is that's I've made a lot of my money in the ES just based upon the initial price response. So actually most of the time in the ES, I'm rotating out of positions in front of targets versus adding to positions in front of targets. NASDAQ's different. NASDAQ, I'm adding to positions towards targets.
Because of the volatility and how it just blows through all those levels anyways. So you can do that. Yeah. Okay.
It fits my personality better these days because I don't want to be super active. So I find that like these days, especially right now, is if I start getting in too big, too quick in any position, most of the time they're just burning me out of it, because it's just not happening either as quickly, or we're just a lot more back and forth action, And so I'm trying to be, as a scaler, very small in an area that I like, even in the S&P. And I'm not really getting aggressive in too much just because of the type of action that we've seen. Like this morning, I wanted to be long a bunch of stuff. And, I actually got long the S&P. And when I started to see how the VWAP was acting around opening range and we were staying below it, I got out of them. And I just couldn't hold them because I'm like, how far can I scale into this? And eventually they just ripped higher and rallied, So
Mhm.
it's, to me, I think it always depends on the tape as well, right? It depends on what's going on in the tape. Like at the beginning of the year, I think the beginning of the year is a very interesting time because beginning of the years, beginning of quarters, first days of the months, last days of the months, days where we can have really strong trend days or weeks, because those are times where I feel very confident that they're going to try and make a range. Like right now, what's difficult about the S&P that I find is that the range could be in till October. Let's face it, it's not impossible.
Yeah.
Right? So at this point, the market might be done trying to find a high. It might be done trying to find a low for at least a few months. And so you get in the middle of these ranges, and it's like, look at a day like today. Like I can tell you, to be perfectly honest with you, if I was long the S&P all the way up in there, I would have looked at the chart and said, it's hard for me to want to cover this. And I didn't see if there was news or something, but it's not like,
Yeah.
it's like I would be, the way that I trade, I would try and to be hold some position and they would have stopped me out,
Yeah.
because this is what's happening in this market right now. We're just, the range is just unknown. Is it made? Is it not? And I actually talked about this in my first video of the year. I said, a lot of times the market finds a range by March. And I think most of you have been around long enough to realize that if you go back and look historically, it's
Mhm.
pretty interesting. If you go back and look at historic highs and lows, 2009 low, which was the low of the move, the 666, was made in March. The 2000 high was made in March. Those are two really key points in history where the market made a range on the bigger picture that held in the first quarter. So the first quarter of the year typically can be a very, very one directional trade, but it can make that range by mid-Feb, early March, and
Mhm.
then either chop or it's a mean reversion type move that's really strong in the opposite way. And so I think that right now, just for me, when I look at it on a historical basis, coming off of a bear market, I don't know if this is the high, which one's more significant, the high or the low. You know what I mean?
Well, yeah, and if you look right now, where we're at right now, we're we're at the low in March. So we're in that area that is like a chop area
Yeah.
after
You're talking
the
about
end of the first quarter, right?
from last year, right?
Yeah, no, yeah, from
You're looking
last year.
at,
Yeah.
you're
Yeah.
looking at
From
last
last
year's
year.
low. Yeah, I
Yeah,
mean,
from
look at
last year's
last
low.
year's low. Look at the
Mhm.
beginning of last year. Look at how we trended down.
Yeah.
I'm only at my surface today, so everything looks really small to me. But when you look down, you look at that low, and then look at how it rallied all the way back up towards April, right? So it made a
Yeah.
significant low in
Yeah.
Feb March. And so you look at this year, is this year's high made in Feb March? And we
Right
just
here.
don't know, obviously.
Yeah.
But um, and that's why I think, and the reason I even mentioned that is because context does matter of the situation. Like you can't
Yeah.
come into this market and really look at it and be, and say that just because I'm trading intraday that I know how to add. Like, I mean, I go back to it at the beginning of the year, I had a lot of success adding really quickly to stuff. In the last 3 weeks, everything I've added to has been really just a shit show. It's just
Yeah.
not really working out for me. It's like,
Yeah.
if it doesn't go my way right away, most likely they're burning me out of it. And I've been
Sure.
right, so there's a fine balance to it.
Right on. Well, that helped me a lot, man. Honestly, I mean, because I was struggling with adding to winners and stuff. I was just screwing up my position and ended up not going as well as I mean, I'm in a great run and I'm like, how am I not making money? Like, how am I not doing really well? And that's literally why. So I appreciate that. Travis,
Rob.
you there, buddy? Right
Yes,
on.
sir.
Excellent. So I'll pull my charts down. You can put yours up while you talk.
Sure.
And I know Travis has a couple questions for us here. Travis is our trading room manager. So he kind of handles the schedule and he's on a couple times during the day and really has shown a lot of improvement in helping our members as well, find their zone. Yeah, find their zone.
All right. Well, good morning, Mr. Crudele. How you doing?
What's up, Travis?
What's going on? All right. A few questions for you. The first one has to do with kind of a balance and learning to trade. A lot of our members we bring on, we help them learn a very basic foundation revolving around finding an entry point, understanding a trend, a pullback, an expectation from that trend, where to clear your stop, you might say. And then from there, you you drift towards what you might call your own zone in trading, whether you're heavier on scaling, whether you're setting targets further away or closer to where you're at. Each person kind of develops their own zone. My question is, how do you find your zone over time with a balance between repeating what you're already doing and trying new things that you might see elsewhere to add to your zone? How might one see their own learning journey and know they're on the track, if you might say, on the right track?
So I think it comes down to, you have to have that one, what I would call like money setup, right? Where you say, look, this is the one setup I truly like. If I only see it once a week, once every 2 weeks, once every 3 days, that I feel really strong about. I think once you find that one setup with whether it's just 1 or 2 indicators, I think then you're on the path to really, really finding a strategy that works for you. I think that that's one of the, that's one of the first things that you really have to do. So for me, I remember my first actual strategy that I found that really worked for me was a mean reversion strategy with Bollinger Bands. You guys have probably seen me talk about it, and it worked really, really well for me. And what happened was I was able to actually like have something where I would lean on, to where, okay, I'm getting chopped up right now. Okay, man, wait for that next setup. If it comes, all right, fine, do that. So number one, it helped me with patience in between. Second thing is, it's like when it was there and I saw the look exactly that I wanted in the entire situation, then I would know how to size up or size down in it. And then from there, once I started to get really good at like seeing that certain setup, then I was able to like kind of add indicators. Okay, are we overbought or oversold here with an RSI? Where are we relative to the VWAP? Where are we relative on the daily? Are we above or below a 10-day moving average? Is the market in an overall bull trend or a bear trend, right? Based upon whatever it is that I'm looking at.
Right.
Is the market coming off of a day, this, so you start putting a lot of context around it.
So that mean reversion trade setup becomes what you might call a foundation. And from there, you just continue to trade that until things stand out and you critique this and that over time with what you're already doing.
Correct.
Awesome. Okay, so the next question kind of builds off that, but it has to do with having hard sets of rules versus having discretion in trading, and how to identify that over time. Some things might be a very hard rule. You might say, if I'm above this EMA, I'm only going long. If I'm near this Bollinger, I'm only getting in long position. Others might be more discretionary, like your exact position of where you're scaling in or something of the sort. How do you learn to find a balance of those two over time? And how do you understand how much discretion you're allowed to have versus how much rigidity you might say you need in your zone as far as a repeatable process?
Yeah, it's a really, really good question, because it depends on really the foundation that your strategy is built on. Like, so is your strategy built on truly a technical process that is a pure setup, that is almost an automation type thing, but the context is not really that relevant, right? Because if that's the case, then I would say you would want to have a very minimal amount of discretion, and how much discretion you would add would be very minimal, because then I would be adding layers of another technical to confirm what I would consider a systematic strategy more than a discretionary one. Now, if the strategy is something that is like, hey, it's support and resistance, I like looking at the market and seeing how it reacts and how it reacts in the context of the day and the week, then I would say that discretion plays a massive role, because now you're starting to realize, okay, you're looking at things going, okay, does this situation tell me what, versus does this indicator or indication tell me what, right? And so it's going to be there's going to be just a wide range of how that works, in my opinion. There's just not going to be a set answer for that. I think it's really, like I said, dependent on the foundation the strategy is built on.
Right. I've realized some traders automate almost their entire zone, where other traders are better with their level of discretion and actually outperform what they're able to automate with what they trade, if you might say.
Yeah, I mean, like so, for example, like a support and resistance type scenario to me is a very discretionary setup. But if you are using an indication, then it's a lot more of a technical setup. So for example, like, let's just say that I have a strategy that is, let's just do the mean reversion Bollinger Band because it's easy for me because I know it.
Awesome.
I see the Bollinger Band start to come back in. I think there's a possible mean reversion. Well, that's an indication, right? So that indication, I have to look at that and say, did I put the time in and the work in to believe in that indication, right? So does that matter? And so if that does matter to me, then I'm only looking at one side. I'm only looking at that specific indication. My stop is pretty much set. I now have to decide, am I just taking this trade or not? So it's really more binary. If we're coming back on retesting a VWAP on my 3-minute opening range philosophy, some of you may or may not know what that is, but I like 3-minute opening range high and low and stuff like that. It's actually why I bought Tesla today. Because I wanted to buy it back because it's setting up as a trend day up. It's not working right now, but the reason, so for that scenario, that is going to be something that is definitely based a lot more on discretion because I look at the context of the day. Right now, I see the S&P slipping. I'm seeing NASDAQ slipping. I'm looking at other things going like, what is going on? I'm trying to buy the leader to the upside and I'm trying to buy it somewhat aggressively. So therefore my discretion comes into play and say, is this also going to be a reversal day? And I'm looking at it going, okay, it's holding what I think in general should be bias of direction, but it's not necessarily an indication. It's more of a bias of direction. So therefore discretion really matters there because I have to realize, like, I have to start looking around going like, what's going on here?
Right.
So does that make sense?
Yeah. So you might say that you define your level of discretion before the day. Like, those parameters. For example, you might be scaling in, but you can only scale into a certain point or else you're over leveraged or something along that nature.
Well, you're just going to have a weak hand on a more discretionary type trade versus a trade that's a straight trigger, because the straight trigger trade is just going to be boom, boom. It's like, it's over. You know what I mean? It's much more of a systematic mindset, and I think that really, honestly, that's the better place for most people, self included. When I start getting into more discretionary stuff, it's like I go on great runs and then I just go on complete shit runs,
That's
because
when your
it's just
emotions
like,
have more play in your zone. Go ahead.
yeah. I mean, it's just as like, I'm sizing up in wrong places and you're like, what is going on? Like, why is this just not working? And you're always realizing it later. You're never realizing it as it's happening. I go back to the beginning of the year, I mean, I did really well, really long, and I was just very bullish and I was very open about it. And then as we started to come back, I started to get a little aggressive on longs and I just got my teeth kicked in, And so it's like, okay. And some days I figured out the context of the day was only to be short. And then we'd rally all the way back and I'd be like, what's going on? And then the next time I'd get short, so it's like, you could find yourself in just this whirlwind of shit, so it gets very difficult for that. And that's why I think that the way that I think most traders are going to find success is going to have some sort of systematic model. I go back to that one money trade that you can lean on. And to me, that helps tremendously because even for myself, I look at it and go, okay, like, what's going on here, man? You're just getting rattled. Go back and lean on your strong setup. And I think this, even if you want to move into the discretionary model more, which is what I primarily trade, I still think you have to have the backdrop. I think the first step is to have a true technical edge with some sort of triggered setup, because it creates all the things that everyone talks about. It creates discipline and patience because you wait for something that is possibly coming, right? It's coming at some point. And so therefore you can then to be hyper focused on doing something that has some proof. That's why trading moving averages, support and resistance, fibs, those types of things are very hard because they really are all discretionary because it's based upon the context of the situation. My mean reversion Bollinger Band is not discretionary at all because it's basically proved to me in that exact moment that the Bollinger Band's reverted in. And so now it's telling me that the market may revert in, right? Doesn't mean that it will, but it's a straight indication versus coming back to a fib. That doesn't mean anything. Just because it comes back to a VWAP doesn't mean anything. It really doesn't mean anything. It just means that we're back here. Now, the question is, what type of day is it? You have to look at so many other things that come into play to decide on whether or not that's going to be a good trade, because that's why people probably spin their wheels. It's like, well, one day I buy it, one day I don't. One day it works, next day it doesn't. Well, yeah, exactly. I mean, that's because those types of things are, and they're so much more unpredictable because It really does matter the context of the day and the situation, right? I mean, I go back to today. I mean, I don't know where the S&P did on the VWAP. I'm assuming it's below it, and I use that because I talk about it a lot, or a fib, or something like that. I would almost guarantee that anybody who took that first pullback back to the VWAP or a moving average is all underwater right now, right? Because at that point, you'd say, well, look, at today's a day that it looks like it should trend up. And what did I say at the beginning? I said, this is what's happening a lot lately. It's like rip them down. All of a sudden you sell the rally and it's making new highs. The day you don't sell the rally, it's making new lows. You're totally guessing, right? Versus a Bollinger Band move that I'm just waiting. And I take the one mean reversion, which you probably did get today, probably works. But if it didn't, you're you're in and you're out, you're done. Does that make sense of like how I'm explaining like a systematic approach that's still
absolutely
discretion versus a straight discretionary type trader?
Absolutely. You build it off that foundation, and then you find your discretion in it, and your setup, but you can see your entries in your setup, like you're saying. I followed what you're saying very well. That about rounds up the questions I have for you, Randy. I know Randy has a question he might like to ask you if you're around.
What's up, Randy?
And thank you, Mr. Crudele, for your time.
Hey.
Always appreciate it.
Thanks, buddy. Those are great. Those are top-notch questions. Those are like, hey man, I've been around, I've been doing this, because it's like I question myself about some of that shit.
Yeah, and you might say the more process driven you are, the more you trust that zone, because you're doing exactly the same thing rather than thinking you are. It's almost like the more discretion is in your zone, again, the more your emotions might have control over that. You'll think you're making the wrong decisions when you do poorly, and you'll think you're doing great when you're on top of the world, right?
Exactly.
Okay, so good morning. Yeah, I'm on two computers, so I don't know how that works on the surface. Got my camera on one of them and sharing the charts on the other one. So hopefully you see the charts.
I see it.
Because I'm not much to look at. I've got a face made for radio. So that's why I wear a beard. Kind of
beards are in, Randy. Everybody's got beards now. Dude, you're more hip than you thought.
I know, but I started it 40 years ago, so it just took a long time to catch up.
Little did you know how ahead of the curve you were.
Well, I tend to be a contrarian, which is when you started talking about mean reversion, I'm going to that fits my personality well. And if you see my charts, you can tell I've got an engineering mind. So when you start talking about, looking for the things that are more mechanical and stuff, that appeals to me. And one of the things I always love to hear you say, there's several of your podcasts that I like to go back and listen to, and things that you talk about with your father, your dad, when you really wanted to become a trader. And he said, well, if you really want to do it, go find a way.
Yeah, figure it out.
Figure it out. And I found this quote last week. I try to put a quote up on my screen every week to kind of give me a theme for the week. So I thought I'd leave it up here because it reminded me of you. It says, if it's important enough for you, you'll find a way. If not, you'll find an excuse.
Exactly. I love that's a great quote. I might tweet that.
You're welcome to it. I'm not sure where I'm
really good.
But so I like to look for things like that, because as you so aptly put it, the market has a way of feeding you things that you're looking for, and then you get chopped up, and you have to have that resilience to say, well, okay, well, that's the market today. One of the things we like to talk about here is, well, if it's not working today, shut her down. If that's your trade, shut her down and wait for tomorrow. And like you were just saying, some days you take it. How do you determine that? We kind of have a rule of our, how much are we willing to trade? What's our predetermined risk? And you've already answered several of the questions that I had, but that's probably the one that is left here to think about. Okay, if I'm going to be trading, I've got an account, got a certain amount of that count that I'm willing to risk on a trade level, on a daily level, on a weekly level, so forth. And when you're looking at a trade, and so I'm usually on the S&P, that's what I'm showing right now. And you talk about the NQ, and so you have a little more cushion, a little more of that mattress area to decide to get in. But still, there must be something that tells you that, okay, now I'm waiting for a certain thing to enter this trade. So on a turnaround, so if I'm trading there's not much trend today unless I look at a higher time frame. But if I'm in an area where it looks like a trend, typically if I'm not in a trade, then I'm looking for a pullback and a turnaround to get in somewhere around on that turnaround. Some people like to get in as close to the bottom or top of that turnaround as I can. Some people like to wait and make sure it's gotten a certain distance away from there to say, yeah, the market really has gotten enough confidence that the buyers have taken control or the sellers have taken control.
Yeah.
That I can still clear my stop. So now I'm willing to get in. And that's where, when we talk about scaling in, and it's not the way I've been doing it, but I'm starting to think from the discussion this morning that maybe this is something to look at. When you're scaling into a position, you see a spot that you'd like to see it do the mean reversion or whatever you're looking for. And say, okay, I'm going to get in, let's pick a percentage, 50% of my position or 60% of my position. I really like this. I'm going to get in 60%. So I've still got 40% to play with. What would be the trigger point that would tell you, okay, it's looking good. This is a good place for me to put the rest of my position in, or another part of my position. Or maybe I need to take part of my position off and reposition it, or I don't know what all would go through your mind in a situation like that. It sounds like you're more looking at having as much size in at a really good place, as opposed to, as it starts moving my way, oh, okay, I'm going to start adding in without just totally blowing my position. But now that I have the confidence, I'll put the rest of this trade on and then maybe scale out of a percentage at certain key areas.
So to me, it would really be, most of that would be known before it even gets to the area, what my mindset would be. And then based upon the reaction, it would be how fast I would be adding or how slowly. So if I think that the market has found a low or a high intraday or on a weekly basis, and I think that the market's searching for a low or a high based upon that information, then I look at it from the standpoint, intraday, I know the direction that I'm looking for. If it gives me the indication or test the support that I like, most likely I'm going to be in relatively aggressively on first test. So buy some, sell some, see how it hits it, what's it doing, what's happening. I see something in there where all of a sudden it's like, oh, you know, the reactions are, you see buyers coming in. That's where I like order flow tools and stuff like that, cumulative data.
Right.
I think that at that point I start to say, okay, you know what, the market's responding to me, or like you start to see a bunch of sellers come in on a bid and the market can't go lower. And then all of a sudden, you're like, well, they could get squeezed here. I mean, there's just, you know, you're seeing things really, really fast, you know, data that's coming in. And so at that point, I've already known, look, I want to be in. So now is there something happening at the moment that's telling me, yeah, you want to be in more aggressively now or not? You know, it's not really about, oh, it held and now it's going my way. I like it and now I want to add more. At that point, it's kind of over, right? At that point, you should already be in within reason, within a reasonable amount of your full position if you really liked it. You know, the mistake that most people will make is say, look at, I bought some there, it's holding, now it's working. Now we'll look, hey, let me just add to this. And then you're at that point, you're just making a decision based solely on the fact that the market actually, it's actually your way, right? And versus in the moment, and now this is really specific to the S&P because it's a little different in other markets, I will tell you that. So in the S&P, if the S&P is holding a level that you like, and it's coming in, you need to start testing it as it's being tested, right? So it's like buy one, buy one, buy one, buy one, right? And as it's starting to go, you're accumulating your position. If all of a sudden it just rips through, for example, if you're long, well, you know, now you're just getting burned out of them. It's over, right? But if you keep buying them, it's hitting, holding. Like a lot of times what I'll do is I'll work the bid. Will I get hit? Boom, fills, bing, goes my way again. I start to see the responses of it. Because at that point, you know, it's interesting, you know, the algos don't do a lot at once unless they really, really want to. So if they want to buy 1,000 or 2,000, you know, it's all for them. It's everything almost is really kind of what's happening right now, testing the order flow, right? They don't just step in, or nobody that's a really big trader steps in and just buys them all at once and just go. I mean, sometimes they might because they have to or really want to, but it's rare. Most of the time it's accumulation, right? So they're just like in working them, filled. So I look at it from that perspective is if they're coming into an area I like, buy one, filled, buy one, filled, buy one, filled, work the bid, work the bid, work the bid. All of a sudden it starts going my way. I'm like, I lay off it. Let's see, work the bid again. Boom, filled. All of a sudden they're all against me. Well, maybe I start peeling some off. Goes back up, work the bid, right? And all of a sudden it starts to go my way. And I'm like, oh, look, I want to buy 10 and I'm long 6. And every time I work the bid, I'm getting filled and it's going my way. And I like the trade, buy 4 at the market. Now I'm in. You know, I'm not like just standing there and going, oh, I bought 6. You know, oh, they won $2 my way, buy 4, boom, $2 against me. You know, that's the beauty of scaling. I almost click in everything with one lots, options, stocks. I buy 100 shares at a time, even if I'm going to buy 1,000. You know, I do that a lot of the time because I just want to feel it. That's why I think that, like, for me, it's why I use ES over MES, because MES would take me too long to get to a full position. But for the NASDAQ, I could just keep clicking in every 2.5 points if I want to buy within 20 points, and I could still get up to 10, 20, 30, 40 of them, no problem, because it just keeps giving me opportunity. Versus the S&P, the opportunity is a much tighter scenario. So it's like I'm adding within $2, right? So it's like buy one ES, buy one ES, buy one ES, buy one, you know what I mean? And so I'm trying to get them in a little bit quicker for my total risk amount. So that's really how I look at it. You have to massage these things a little bit. It can't be like, I bought this many, now am I going to add to them? Am I not going to add to them? If you decide that scaling is a right tool for you, is the right way to approach it. And, you know, Randy, with an engineering mind, it's like, I don't know why you don't get into something that's a little bit more systematic. Because if you have that type of mind where you see probability, it doesn't necessarily mean if you get more into scaling and you are using more discretion with that will lead to better results. Sometimes you have to look at your strengths and say, look, this is a high probability setup that I should just be in, and it's almost predetermined, right? And there's factors there. And maybe you take the thinking off the table a little bit because you're someone with your type of mindset, you know, it might be better for you. Like I am naturally a risk taker. So I don't really look at the odds a lot. I just look at it and say, if it's working and the feedback is good, I'll get as big as I can afford to be. And so my mindset is very different. I am not somebody who plays on, this is a high probability setup, this is the best one I have, because I'm taking in the moment data to say, this is working. And so I can get really aggressive. And I'm okay with taking the hit. You know, because in my mind, I know that there will be times where I will get the market back. So I just got to take it within as much as I could take it at this point, and that's it. And like I said, I've been getting clipped lately, but if I have 1 or 2 really good trades, I will make it all back. And I'm not really necessarily trying to do that, but I do know that when that does happen, historically, that's how I operate. So I'm not somebody who is very systematic because I don't like to just come in and just buy them, wait, sell. I don't look at it from that perspective. I look at it as like, if I find that it's a trend up day or a trend down day or a mean reversion day, and I really grasp it, I will make 4, 5, 10 times my losses versus like up one, down one, up one, up two, down one. I don't work that way. And that's just me on a personal basis. So I think you do have to realize that just by scaling, for any of you out there, that does not mean that will indicate better results. Some of you may be better off being more of a, predetermined, understand the situation going into the trade, and if it's a full or not full position.
Okay.
Yeah, I think that's key, Dele, honestly, because assuming that every trader should be scaling in assumes that we all have the same personality and risk assessment, risk adversity, right? Where we don't, we're all different. So I think each trader has to decide for themselves if scaling in is right for them, or just, hey, let's just get in and get our 4 points and we're done.
Exactly.
And that's part of my problem is, I did mention that I'm an engineer. What I didn't mention is that I'm also an artist. So I'm a calligrapher and a musician. So there's these two things that are at war within me that see the patterns. And so it's not just, I love the engineering part, and maybe I need to just pick one and say, okay, that's what my strength is in this particular environment. So I'll play to that.
Excellent, Randy. Hey, we only got a few minutes left here, and I know Titus. So Titus had a couple questions. Hey, thanks, Randy. So Titus, you there, buddy? Titus, there you go.
Yeah, I'm here. The mute button went away. Hey, Anthony, nice talking with you today. I'm really
How are
glad that you came onto our group here. Like Rob said, there's a lot of us here that follow you on social media. We're usually always in your streams that you have on YouTube. A lot of this, we've listened to things that you've said and we've tried to implement it in our own trading. And I have a few questions. I'm going to wing this because these guys got good questions and they kind of grabbed a few of mine, but I do have a few questions. So something that you might not know or you might know. I'm kind of curious. I a while back took the Fibonacci retracement tool and repurposed it. So everything you're going to hear here isn't using the Fibonacci tool like it's not discretionary. It's been placed on a daily chart and it doesn't move, right? I've been trading off it for like a year now. Well, when I had done this, back when I first set this, I set it on the low that you had talked about, right? Over here in April, right?
Yeah.
Sorry, in the beginning this low that we had came in, right? Sorry, that's the wrong low, this low over here in April. Well, what's interesting that we noticed is my level that I set the Fibonacci levels did not move, but the market was adjusted by 52 points roughly. Do you happen to know why they would do that?
Wait, I'm confused at what you're saying. What happened now?
So here, let me.
You say it adjusted it. I don't know what you mean by that.
The all-time high was 48.99, right? On the MES, and then they adjusted it after one of the contract rollovers to 48.52. Or it's 47.
And the only reason we know this is because I had a preset levels that did not change and the price points didn't change, right? So if I put this Fibonacci on the market, it hasn't changed. It stays in the exact same spot. Like we have numbers set, right? Like it stays at 4799.75 on the top, but the market was at that position, but they moved it up to where it's currently the top is at 48.52.
Let me take a look.
So in a nutshell, the all-time high changed. And I've never seen that happen.
Yeah.
Where it was at 47.99 and now it's at 48.52.
Yeah, so here, let me get rid of this line. This line's just where it went to, but this is the fib tool that I had put on, right? You can see where the top.
So you're looking at the high. Tell me the high because I can't see your screen right now. So what was the date?
The date was 1/4/2022. We had that when the market came up, and it's showing right now that we had a high of, I think it's exactly 4850.75.
Yeah, and see on mine, when I look at mine, it says 4808.25. Isn't that crazy? And the reason why that is because when you look at continuation data, this is why a lot of people end up using like CQG for stuff like this, because the CQG data packages will pull back not that they're not pulling back the exact data from CME, but when you have a continuation on the futures market, it's going to pull back the front month's high. And so I don't understand exactly how it can vary between the two, except the fact that when they pull back the data, they could be potentially pulling back the data for the wrong quarter. So the high potentially could have been 48 something in what was going to be the new front month. And so when they did the continuation, that's how they calculated it. It's one of those things where it's almost better to go to the cash SPX to look at it, because that can't change. It's not settled. You know, when you're looking at daily or quarterly data, I would say you would want to go to the cash markets for that, just if you want to get something that's an exact read. Because the futures markets, like I said, they're all pulling data from CME, or they're all storing the data as it's happening. And so therefore you could have some variance on where they look at the continuation. I know it's kind of a bummer, but that's what it is.
All right. Well, it actually didn't affect me any, which was good. I was just curious because a lot of us were wondering what it was. Okay. Real quick. So I've been practicing with scaling in, and I know you're not able to see the chart really well right now. But
I can see it. I could see it enough. Yeah. I just can't read the prices.
Good.
They're pretty small.
Yeah, don't worry about those. But anyway, so I have a strategy that I've been working on, right? So I'm guessing what you had said to Rob earlier is kind of what I did here. And I'm just going to run through it just because I don't really have another question at the moment. So what I'm gathering, so I got in here at this trade and I got in and I got stopped out. This one's irrelevant, but that was my spot. So I re-entered it as it came in over here and I got my first target. Now you were talking about a range of execution. So I have an area here where I still want to get in, right? So what I ended up doing is I got filled with the 2 contracts out of my 3 contract trade. I re-entered back at this level with just a single contract, managed it with the one that I had left over. So what I'm gathering what you said earlier to Rob is if I'm going to be trading at this level in the S&P, you know, during the day, these smaller targets, it's better for me to come in with the majority of my position and then slowly add to it within my range of execution. Is that what you're, I'm not asking you to tell me how to trade, but is that what you were suggesting, like for a smaller trader, not to start with a small position, but to start with the bigger part of it to capture that move that you're initially trying to get in on, and then to gently add within a range of execution?
For the S&P, I'm always mostly in as close as I can around entry, right? So especially it looks to me as though this is somewhat more on the systematic side than the discretion side, right?
Very systematic. My entries are always within a quarter point of a level.
Yeah. So then for you, it goes back to what I was saying to Rob, is that if you, especially for the S&P, I mean, I can't stress this enough, because if you have a systematic approach and you're trading the S&P, you're trading 10-year, you're trading, I think probably those 2 markets come to mind the most. They're very, very price sensitive markets, right? So therefore, if the reaction is good, then you need to be in as much as you can, as quickly as you can. The NASDAQ, gold, I mean, they're not price sensitive markets. Some people will say they are on a daily or weekly basis. That's probably true, but intraday for a few ticks, it just doesn't matter. You know what I mean? The slippage is too great, and that's why people lose money in them. Same with natural gas. Same with a lot of those other markets. The price, that exact price of that tick, does not matter as much. The S&P does. And so when you have a market like the S&P, you have to look at it as like, look, is my strategy is getting the response it wants, especially a more systematic approach, because if that is the case, then you need to be accelerating your speed of entry upon initial test, right? NASDAQ, I don't know if you trade it, but that's why my mindset's very different with NASDAQ, because it's like with NASDAQ, I'm going, yeah, it looks good right now, but in 1 second, it's 20 handles against me again. And so I'm clicking and I'm widening it out so much. And I'm like, click, click. The S&P, I'm like, click, 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 all in. You know what I mean? It happens quicker, and I'm exaggerating that a little bit, but that's my point.
Okay, that makes sense. Yeah, you know, I don't really have a lot else to ask you about that. I think, like I said, a lot of it was covered. I was going to ask you a question about just emotionally dealing with it, but we've heard you talk about that a lot. I know it's a really important part of trading. But I did want to ask you a question because I am really target oriented in the beginning of the day. Like I'm looking at targets top and bottom, and I'm sticking to plans and I'm executing them. But the thing is I try to trade directional, right? So regardless of what the market's showing me, if it's very trendy or not, as long as I can get in a short-term trend to make my trade, that's what I'm looking to do. But one thing that I'm definitely curious in, and I know other members here, and if you could just talk briefly real quick about it, is the event contracts. Because I could see that benefiting somebody like me that has targets that I'm confident in, but I'm only trading one direction for the day. Is that something that
Yeah.
somebody like me would be interested in getting involved in?
Yeah, because it's a binary outcome, right? And so that's really what they are. They're binary options. So therefore you have an idea of the day, and that's really what they're built for, versus like trying to trade a regular option or a future where you have all sorts of different things could happen within, and the risk just becomes too difficult. I mean, you look at today's perfect example. Like if I thought they're going to close above, let's just say 4,000, right? And I bought the market at 4,005, or I bought the options when we were trading 05 or 06. I don't know where the S&P is trading right now, but most likely you're
39.94.
so it broke even more. So my point is that you're in the game still with the binary contract, because, and it doesn't, you don't get blasted by being wrong and trying to be right for the whole day. I mean, I got a lot of heat for this on Twitter or on social media. People are like, oh, Anthony's pushing binary options. No, I'm pushing an additional tool to a trader. I think that this tool is being overlooked in a very, I think, wrong way, because there's a negative connotation behind a binary option, when I really don't believe that there should be. And there was bad actors and a lot of people that did push this product in the past, and there was a lot of the crazy things going on overseas mostly. But when you looked at what happened, what CME did, and I think that they've created a really great product for this, is they've allowed the entry level trader and the intermediate to advanced trader to just pick a direction for the day and not have to worry about managing risk throughout the entire day. And I think there's a lot of great reasons to use this on specific days, right? I am someone who would tell you, and look, I'm a big advocate of these. I've worked with the exchange on building this product. I've worked with Tradeovate on it. So I've got a lot of skin in the game. It is not meant for every single day. It is meant for certain days where you look at it and say, look it, man, this is a really good tool for today. I mean, lately, if I was just trading those on my ideas, I'd be making money. I'm actually down money in the last 2 weeks. Why? Because the slippage has been too great. We all know that when it gets choppy, and I know which direction it's going, and you can trade as big as you want in those, and that's what's interesting about it as well. So it's like, I would say that, yes, put them in your tool, put them in your arsenal. Don't be married to them. But I think it's a great tool to add. And that's really what I've been trying to preach to all the traders that coming in to place your trades, community, and say, look at this is, this to me this is a much better product, because or a much better product than sometimes these other products. And so that's really what I've been trying to push for. But I do think that it's something definitely to look into for what you're looking at, especially a systematic person who's like, I like this level. I think it can hold. I think it can target this area for the day. You might be able to buy that option for $5. That's way up top. You might be able to buy 20, 30 of them for less risk than you trying to be long. Because if you buy 30 of them for $5, it's $150. But you make, $450. So,
I watched I watched one of your ones in the morning where you went over and you guys literally placed a couple of trades. It was like Brian Shannon. And I think that would be a great way where you were anchoring it to the VWAP and you guys were, going through it. And he was literally taking live trades with you. And I think that might be a great thing for us to do at some point. We'll do some more due diligence on it. We'll put something together. But would you be willing to come back and maybe walk us through the trade of 8 and you know, look at taking some contract or some event contracts and kind of help us walk us through that process? Because I think it would be a great thing too for traders who want to sit here and just look at their charts for 6 hours a day and look at candlesticks, to come
Yeah,
in,
I
make a
agree.
decision early in the morning, and then go about their day. You know, it might be a really good option for some people who just don't like to look at candlesticks all day.
Yeah, I mean, I agree, because it's a lot easier to look at that close versus like trying to, you know. So,
Perfect.
great chat with you guys. I do have to run. I'm getting
Right
paid
on,
up.
Deli.
I have
Thank you,
to do at
Crudele.
11:30. And so it's great seeing you guys. It's always a blast. The questions are awesome, and I love seeing your group grow. You guys are
Yeah.
great.
Thanks, Deli. We appreciate
Yeah,
it, man.
thanks again for your time, man.
See
All
you,
right, buddy.
everybody.
Take care.
Thank you so much.
Bye-bye.
Awesome.